talk about IPOs, right? It's the season of IPOs, and we have one more IPO that will be hitting the D Street soon, and that is Entero Healthcare. They have already opened up for subscription as well. It's a when you look at the overall size, total issue size is 1,600 crores. Now, to talk about the IPO as well as what we should be expecting from the company, we have Prabhat Agarwal, promoter and MD and CEO at the company, while Prem Sethi, who is the promoter, whole-time director at the company as well, and CEO at the company. Thank you so much, gentlemen, for joining in with us this afternoon on ET Now. Anchor book has been very strong already for the company. So yes, already cheers coming in on that front. But let's just understand the business model, right? There are two parts mainly that come in. One is distribution model and the marketing for the company. Explain the business to the company. How much of each of these segments actually, comes in from the revenue comes in from these segments?
Sure. Thank you first of all for inviting us to the show. And let me start with the first question on Anchor Book. We were very excited and very happy to have these kind of very high pedigree quality investors reposing faith in us. In terms of our business model, we are a core, our core business is distribution services. So we are one of the largest distributors, healthcare distributors in this country, and this has been achieved in a very short period of time, which is, around 5 years. The company itself was created in 2018, right? So, and today in 5 years, we have a massive customer base of 81,500 pharmacies. So almost 1 out of 10 pharmacies is buying from us. We have 3,500 hospital customers. We are the largest hospital distributor in the company. We are working with 1,900 plus different pharmaceutical and healthcare product companies for the future, because we think it's a very unique and a differentiated business model. Once the IPO proceeds, we receive that money, will be, last 3 years, our average annual growth rate has been 36%. And once this proceeds, we will be even more aggressive, in terms of pursuing growth opportunities. In terms of business mix, as you asked for, 95% business is coming from distribution services, but we do also provide a lot of value-added services to these companies in terms of providing marketing and promotion services as well, but that contributes less than 5% of our business as of now.
Okay. Now, if you look at your financials and your RHP, we believe that for the first 5 to 6 initial years, you were building the business, and hence it was kind of loss-making at least till FY23. But in the first half of FY24, you have reported profits. So what is the kind of profit trajectory that investors should expect from here on, at least from the company?
So, we have been profitable at operating profit at EBITDA level from year 2 itself. So last 5 years, we have been profitable at an EBITDA level. In the first 6 months of the year, we have turned profitable at the PAT level also, right? And as we had close to 3% EBITDA margin in first 6 months of this year, and at 11.5 crores for profit after tax in first 6 months of the year. As the business grows, and as our scale is growing up, our buying power is going up, various value-added services that we are providing is going up. The operating leverage kicking in from growth and scale of the business. This profitability not only sustains but would also increase going forward.
Okay, now given that you are more into this wholesale and distribution business, we understand that revenues must be much higher and margins could be on the lower side. But any initiative for margins to expand from here on?
Yes, definitely. There are multiple levers available to expand the margins. Number one is, the scale of business. As, we grow our business, our buying power goes up, there's expansion of gross margin possible there. Our share of private label goes up. That gives us a much higher margin to us. The operating leverage goes up because, a lot of our upfront investments have been done in terms of setting up the warehouses, manpower, technology that we have created, right? And all these will, as the business grows, these costs are not going to grow in the proportion of sales, right? So, definitely the profitability will go up based on, as these levers play out.
Right. Mr. Sethi, let's get in a word from you in terms of the company. It is growing pan-India distribution model. Yeah. Currently, it has been able to, do around half the penetration that it requires. So one, in terms of trajectory, what is the scope there? How do you see that as well?
See, what we're looking at is, so we've done 34 acquisitions in the last 5 years. And we've already signed 17 more term sheets in, which are already, signed. And we'll acquire them very soon as, the proceeds are going to come in. So our expansion is going to be now more into tier 2, tier 3 cities as well. Compared to where in the first initial years, we were focusing more on metros. And now our focus is going to be more in tier 2, tier 3 cities, expanding our current base in, going deeper in the cities that we are already present, and also trying to get into tier 2, tier 3 cities of the market.
Right. So, I just want to understand, then is acquisition the only way to go in this industry?
To actually get growth. So, so the entry strategy could be very, could be two ways. One, we could go establish our own setup in any given micro market, or two could be, if there is a right partner available in the market, which we can go and acquire. There are 60,000 plus distributors in our country on the pharma side, which are mom and pop distributors, which are available at the right EV/EBITDA multiples. And if, we are able to get our mindsets aligned to grow together, then we are more than happy to do acquire distributors in those micro markets. Otherwise, we're more than happy to open our on our own setups. So post acquisition, also one more point I would like to add here. Post acquisition, the right to win is so clearly established, on Entero model, that we've been able to grow these distributors by 4 or 5 times in the last 3 years, after we acquired them. So both ways, so inorganic as well as organic.
See, acquisition is not an end in itself, it's a means to an end. Acquisitions helps us to, penetrate in this country. India is a very fragmented and a very diverse geography, right? The way business is done in Guwahati is very different than the way business is done in Goa, right? So, the acquisitions helps us to, penetrate into newer markets for us, increase our scale, increase our presence, right? And that's, we have used beautifully both organic and inorganic to expand our presence in the country.
And lastly, before we let you go, if you could just give us an idea of how do you distinguish yourself differently from your peers. I guess MedPlus is one of the peers that you have mentioned in your RHP, and I believe you follow an asset-light model and MedPlus doesn't. So is there any other way, how do you distinguish your business?
Yeah, I mean, we are asset-light, if you look at, our total fixed assets is close to 40 crores for, around 4,000 crore of business, right? So, we are a B2B player, we are not a B2C player. Our job is to enable these pharmacies who buy from us, and there are 900,000 pharmacies in the country. We are supplying to almost 1/10 of it, right? So our job is to increase our presence in these pharmacies who choose to buy from us, and they get a good range of products from us because we have one of the widest range of products available. They get a good service. They get a good technology-enabled, buying experience. So all these helps us to create a very strong moat with our customers.
Okay, gentlemen, thank you so much for joining in with us. Good luck for your IPO. Hope to see you post the listing as well very soon. Thank you so much for joining in with us in the studio especially.
Thank you
So much, gentlemen. So that was the management of Entero Healthcare joining in with us. But